All right, we are live. It is another week of What the F Happened. So we're streaming right now on TikTok, on Instagram, on YouTube, and also on Facebook. And we are going to get into the meat of what's going on. We got Jerome Powell starting to get ready to tell us what they're going to do over there at the Fed. And, here's what to expect from today's Fed Reserve announcement. Probably another quarter point increase, which is kind of what we expected. But will they surprise us? Will they surprise the markets, or is it going to be the normal? How about First Republic Bank? Another large, they call it regional bank, but look at the assets these banks have from Silicon Valley Bank to Signature Bank to now First Republic Bank. You already know about Credit Suisse. Oh, that's not on our soil. Still affects the banking system. Like, what gives? But, JP Morgan's going to come to save the day. Does that mean that we're literally in the future only going to have a couple giant commercial banks that we can deal with? Are they trying to intentionally get rid of all the regionals, or are the regionals really just making this many mistakes? And this is Mr. Lazy Cash at it, coming back in for the show. Good timing. You're a little late. But that's what we're going to go over. We're going to hit all of this and a lot more on today's show. We'll be right back after this. All right, we are back at it. Welcome back, everybody. Another week, which means another week of What the F Happened. We missed last week because we were traveling. We've been literally event after event after event. We just did our private money club money tank event out there in Utah. Thank you for all of you that actually attended. It was a wildly fun event, very educational, and everybody's raving about it right now. So make sure you check out the next one. First part of I almost said September, of August. We got our next one, August 4th and 5th, I believe is right. And then we'll put the links up for that. But Steven, what's happening on your end?
Hey, good morning. Yeah, we just missed the last couple of weeks, so it's nice to be back, kind of checking out what's going on with the news. And it's been chaos, like you would expect. Banks are failing. The Fed is shooting rates. I saw the ADP jobs report was sky high in April, much higher than expected, which – when they say they're getting this inflation under control, they're going to start bringing things down. Things like shooting payrolls doesn't help with that situation.
Not at all.
That might throw a little wrench in Powell's speech today. We'll see what they say. They were talking about maybe one more quarter point increase and then, maybe stopping the increases for now. But, man, this is just getting nuts right now. So a lot to talk about, and we can kind of get into some of this stuff as we go.
It is crazy, too. I mean, if you really think about everything that's going on, you think about why the Fed right now, 100% probability that they're going to increase rates another 0.25%. And then right there next to Jerome Powell in the news, you've got private payrolls surged by 296,000 in April, which is a lot higher than what was anticipated. And I've said this on multiple shows, including this one. The number one reason why the Fed is not succeeding at controlling inflation and getting us down to the target of 2% is right there in front of your face. We're all employed. We have jobs. Private payrolls are growing. The Fed doesn't want private payroll to grow. They want private payroll to fall. They want more people unemployed because that's how they'll get a hold of the economy and the inflation problem, because as people lose jobs, they can't spend money. When they can't spend money, they can't rack up their credit cards. They can't go on vacations. They're going to go to restaurants a lot less. They're not going to buy new cars, and they're going to slow it all down, which we've already seen happen. And I don't know what lens most of you are looking at, but I'd love to hear your comments. When you're out there talking to people, maybe you're just conversating with people, does it seem like people are all doing well, or does it seem like people are struggling? Because to me, and maybe it's because where I live in Buffalo, which is a very lower income, or just lower, I guess that's the way to say it, lower income area, people are struggling. People are having a hard time. Grocery bills have doubled. Utility bills have gone way up. Everything is going up, but yet somehow inflation is getting harder and harder for the Fed to manage. there's some interesting things, Stephen, and I think this is not in the news headlines, but I want to cover this. I want to cover a couple things that are not in the news today. Number one, money supply. Money supply is how much money there is in the banking system, in the entire system. That's the money supply. For the first time since the Great Depression, the money supply in this country is declining. What do you think of that, Stephen? What do you think that means?
Well, when you degrade the money itself, the currency itself, and it makes it less and less valuable, and we do everything we're doing globally right now. I mean, I just saw that the yuan, the currency used to trade in China, is now used for international trade from China more than the US dollar for the first time in history. And so these other countries and economies are looking for alternatives. And you know, the United States dollar being the world reserve currency, it's always been a given. That's starting to be questioned and starting to become reality. Hey, how does this, you know, where does this end? Where is this heading to? And none of it looks like good news right now. So it's fascinating to watch. And what's more fascinating to watch is the fact that, like you said, that it's not in the headlines. You know, it's not really being discussed. It's not at the front of these political speeches. It's all, you know, social stuff and all this, you know, all the crap that they want to talk about. It's almost like distractions to keep us from finding out what's really going on. I mean, they're testing the central bank digital currencies right now, and the Fed now, and all that is going on. And so there's all this stuff happening over here while they're trying to keep us focusing over here. And anytime that happens, it never seems to end well for us, the people.
So Justin from YouTube had an interesting thing he just said. He said, where are you finding all this information? Because when I'm Googling stuff, and I want everybody to really pay attention, so listen to this. When I'm Googling stuff, it's very vague or I can't find anything because I assume they want to hide the truth, just like everything else. So Justin, you're absolutely correct. So where do we get our data? I subscribe to 4 different economic newsletters that are private and put out by economists. Some economists that most of you would know the names of, and other economists are just economists that work for family offices. So when you think about information, where are you going to find the truth? You're not going to find it in the news tabloids. And even if you do see it in the news tabloids, it's already old news. It's too old to really make an opinion on. And when we see that about First Republic, about the Fed, that's already baked into the market. So where do you get the real information? Well, you have to go to the source. You have to go to where the wealthy get their information. And that is economists. Most family offices on staff have some type of an economist that can really look at data, look at economic data and patterns and cycles, and really come to a conclusion of where we're going in the next 3 to 6 months. And that's what their job is to do. And most of these economists, or some of them, for their client base, will put out a weekly or sometimes monthly newsletter. Because of my relationships with various hedge funds, my relationships with these actual economists like Harry Dent Jr., whether you like them or not, it's still a very good read. And then also some of the other ones that are pretty open out there because they want people to know, you can then start getting a very good indication of what's going on. And then also on YouTube, there's another channel called Valuetainment. You know, it's Patrick David Bet, Patrick Bet David. I always screw that up. He's pretty good. He's getting kind of similar information as we are from the source. So that's how we're doing it, Justin. There's no secret. You got to pay for the information because those are all paid subscriptions, or you got to have enough money to be part of a family office. I'm just lucky to have known and become friends with the owner of a very large family office, and they then just put us on their newsletter, which is where I get a lot of the data from. A couple things coming in from TikTok. I think this is pretty interesting. We got one gentleman questioning K1. We all should be questioning K1s. He said, I knock on doors for a living, and even the rich want to save money. So I live in a very affluent neighborhood. I mean, it's the wealthiest neighborhood in Buffalo. I'm not bragging. I'm just telling you, like, all my neighbors are doctors, surgeons, anesthesiologists, business owners of the largest companies around. And I will tell you, a lot of them in our discussions, and it's rare, they're pulling back. Their businesses are either not hiring, freezing hiring, or looking at doing layoffs. I mean, just today in the news, you got this is an interesting one because I didn't anticipate this happening, but right here, United It's a crappy airline anyway. But United is laying off 600 employees, or 8% of its workforce. But that's just United. There's so many companies laying people off, but yet employment is still ticking up. And a lot of the reason is when you look at ADP's employment data that they're posting here, that data is actually old data. So one of the things that I get out of a lot of the newsletters I read is I get up-to-date data. The data that you're going to get from ADP is a lagging indicator. What that means is it's old data, not old, but it's just data that's already baked into the market. So that's not going to move the markets or Jerome because they already have that data. You see, they're getting their data direct from the source. From I'm trying to think of what it is. It's something with the Fed where they get that exact data well before it ever goes out to the public. But I agree. Right here, Matthew Whiten on TikTok said most are struggling. 100% they're struggling. Most of the people we see out there are struggling, and it's a really interesting thing when you start digging into it to find out, like, how is it that everybody seems like they're spending money? Because when you go out, it does. It seems like everybody out there is spending money. Where are they spending the money? Well, it doesn't take a really smart person to figure out what money they're spending. It's not that they're making a ton of money. It's that they're spending a lot of money on debt. They're using credit cards. Credit card debts, like the number of people that are in credit card debt has literally in the last 6 months, might even be a little longer than that, spiked. It's an all-time high. And let's go back to money supply, Stephen. When we talked about the money supply, I mean, there's no secret that the Fed is unraveling their balance sheet, which is basically unwinding it, sucks money out of the banking system. And they've been doing this, and there has been no news about this. That's the interesting thing. Nowhere in the news can you find out what the Fed is doing with unwinding their balance sheet. But the money supply, the charts on the money supply tell the story. They're sucking massive amounts of money out of the banking system, trying to slow this down. If there's less money in the system, what comes next? You all guessed it. How many of you own, by all of you, how many of you own a small business? And on YouTube, on TikTok, on Instagram, how many of you own a small business? Chat in. Yes. I just want to know how many of you own a small business. Great. We got some people chatting in here. Let's just let that come in for a little bit. Yeah, American Airlines. Lynn Green said American Airlines is. Oh, I lost that because so many people came in. Are going on strike. United can switch airlines if they get laid off. Oh, that's interesting. Okay, so when you talk about money supply, who does that impact? Well, first off, it impacts banks. Banks right now are not lending. And you can look back in history. You can look to from 2008. That's where the best data is forward. And you can look during the Great Recession. How much did banks pull back? It was double digits. So banks were basically lending a lot less money. And when you do it from a percentage, it was double digits. During the pandemic, it was even higher, but it was very short-lived. And right now, you're seeing the exact same thing happen. You're seeing banks pull back the reins. If any of you own a small business and you need money and you go to the bank, good effing luck, because this is what the F happened. Good effing luck. You're probably not going to get a loan. Banks aren't lending. Even if you've got a good relationship with the banks, they're not lending. Oh, you got really good credit? Did you hear what they just did? Well, it's a redistribution of wealth. So this is another thing you'll never see in the news. The redistribution of wealth from the haves to the have-nots. This is nothing new. It's happened throughout history. And if you study Ray Dalio, he talks a lot about this. How do we take money from the haves, people with money, and give it to the have-nots? Well, you just saw it happen, as a matter of fact. They came out and they said, hey, all you people that have worked really hard to have good credit, all you people that pay your bills on time, if you buy a house and put 20% down and you got a credit score of 740, guess what? We're just going to charge you more. We're going to punish you for having good credit and punish you for making your bill payments on time. Oh, then over here, for all of you over on this other side, the have-nots that have bad credit, that have the higher likeliness of defaulting and the higher likeliness of not paying your bills, we're going to make it cheaper for you. That's right. So what is this? But nobody will call it this. This is a redistribution of wealth. And this isn't going to be the last of it. You're going to start seeing a lot more of this. You know what that's going to do? It's going to make the haves not want to do as much. It's going to make the haves not want to go out there and try as much to have good credit. It is going to have a massive negative impact. How do we know this? Because it's happened in the past. Study the past and you'll see the path of where we're going in the future. You really want to know where we're going? It's so easy. Listen to Ray Dalio, listen to Munger. He's talked a little bit about this, but you got to read between the lines. And the economic news letters that I get, the white papers that I read, if you study 1929, I've been saying this for a while, Stephen, you know this, I'm almost like a broken record. We are living in 1929, and we are about to go off the cliff. You're seeing it. You started to see it yesterday. Over 300-point drop in the markets, okay, because of First Republic Bank. Oh, but JP Morgan's going to buy it. That's just a consolidation. The big banks supported by the Fed are really just gobbling everything up. Jamie Dimon, whatever. I'm not even going to say anything there because I'll probably end up floating face down the river, and I'd prefer not to do that at this stage in my life. So anyway, what else do we got?
Yeah, no, I just reading a little bit about what the Fed and the Treasury are doing, and the way you get to this stuff. Somebody's asking earlier. A lot of times you kind of got to go direct to the source and look at the actual sites. Actually look directly at the Federal Reserve site, look at the Treasury, kind of read between the lines what they're doing. I mean, here's a couple screen shares just to give you a kind of an idea. So this is just talking about. So Zero Hedge is a pretty good follow on Twitter, if you guys are on Twitter. So they're just saying, if you thought policy schizophrenia was limited to Fed hiking rates at the same time as injecting $400 billion in liquidity to avoid escalation of banking crisis, the Fed will also still be doing quantitative easing at the same time. The Treasury is going to start a normal routine buyback program for bonds. So the Fed is going to be tightening while and Treasury buying back bonds is just another way to create liquidity and quantitative easing. So they're literally doing these things simultaneously. Why? Because they don't know what to do right now. Inflation's going crazy, like we just talked about with the ADP job numbers shooting through the roof right now. Like, this stuff's all happening and it shouldn't be going on. Like, all the tightening they've been doing should be starting to slow the economy, slow these jobs, slow the inflation and everything. And it's not. And simultaneously, they can't keep pushing because these banks are failing. This is a big problem. Have we talked about, Chris, kind of why the banks are failing, what that looks like? Do you want to get into that a little bit? Just
yeah.
Go ahead.
So listen, here's the other thing too. A lot of, the news wants to make the banks, the regional banks, to be these really bad people operating really dangerously. Now, there's some truth to that, but more of the truth really lies in the knee-jerk reaction. It's the investor or the depositor sentiment that's really creating the issue. So when you think about how a bank works and you think about how they operate, first off, for any of the folks out there, if you think that banks keep their money in the vault, you're wrong. They take your deposits and they make your money go to work for them by lending that money out, which means most of the money's out there being used and being, put out as loans, which means they have very little money. They have to keep, because of fractional reserve banking, roughly 10%, of their money in tier 1 capital, which means it needs to be in guaranteed, we'll define this, liquid places. And what do banks use for guaranteed liquid places? They use whole life insurance. Okay. We talk about it all the time. It's called BOLI, bank-owned life insurance. That's one. And the top 5 banks in this country have $75 billion. And that's old data, but it's more than that today. And the second place is Treasury bonds, because they're guaranteed by the full faith and credit of the U.S. government. Now, both of these places are very liquid. When you put money into BOLI policies like the banks do, they're designed the way we design our clients' whole life policies, for liquidity. So the bank has immediate liquidity of that money, but Treasury bonds are a different story. So as you saw with Silicon Valley Bank, and if you've watched any of my YouTube videos about this, I go deep into explaining it. So if you haven't, subscribe to @Chris and watch my YouTube videos about banking system collapse and what's happening and why it is. So banks take the money that they need for liquidity and they put it into guaranteed places. Why? Well, because it's smart to do, because they get a percentage. They get paid a yield on the Treasury bonds. So what these banks did is they took a lot of money, 2 years ago, and they put it into 2-year, maybe 10-year bonds, because they got to keep that money liquid. So they need short duration. And just for the record, Treasury bonds are one of the most liquid investments there are, meaning if I buy a Treasury bond or a bank buys a Treasury bond, they can sell that Treasury bond like that. There's always a buyer for them. But here's what they missed. You see, inflation went up so fast. The Fed ignored it in the beginning. Oh, it's transitory. Oh, it's not a problem. Then, oh, whoops, it is a problem. Oh, whoops, we missed that one. Oh, crap, we got to slay the dragon and we got to do this quick. So they very quickly, in 1 year period, raised interest rates 7 times. So now stay with me, folks. When the Fed raises interest rates very quickly, like they did, The banks or any holder of treasury bonds face a very difficult problem, because as interest rates go up, I just want you to think of an x-axis. Okay, when interest rates go up, this is interest rates going up, the price of the bonds goes down. So now the banks are holding a guaranteed investment, but the guaranteed investment has lost significant value because interest rates went up so fast. Interest rates went up, the price of the bonds went down. Not a problem, okay, in normal sense, unless some news comes out that the bank is struggling, the bank is trying to sell, investor and depositor sentiment switches to a negative sentiment, and there's a run on the bank. And everybody lines up. We saw this happen. Silicon Valley Bank, Signature Bank, First Republic, billions of dollars rushing out of the bank in a matter of weeks. Now, all of a sudden, the bank's left like, uh-oh, hey, who lost the key to the vault? Like, we need some money. They don't have the money because their money's in treasury bonds. And they get to a certain point where literally they exhaust all liquidity, and now they need to sell the one thing that they don't want to sell, and that's the bonds. Because when they sell, what are they doing? They're selling low. Why? Because interest rates went up, so the price went down. What should you do when bonds go down in price? You should be buying. But unfortunately, the banks had already bought the bonds, and now they went down in value and they needed liquidity, so they had to sell the bonds, which created a massive loss, which triggered an even worse sentiment for depositors, and there was more runs on the bank. So the real problem here is not so much that the banks did anything wrong. The real problem is that the banking system as a whole is screwed, because it's built wrong. It's built on fractional reserve banking, the complete opposite of what insurance companies are built on. So because of fractional reserve banking, banks don't have liquidity. So when they need money, who did they got to go to? Well, now they just go to the Fed. Now they just pledge their treasury bonds to the Fed. The Fed then gives them a short-term or long-term loan at a low interest rate, and all as usual, until there's more runs on the bank. So here's the real question. When you look at this and Jim, listen, Stephen, you and I always talk about this. We talk about Jim Cramer. You want to predict the future and know exactly what not to do. So when Jim Cramer tells you to buy something, short it. When Jim Cramer says to do something, do the exact opposite, and you'll become filthy rich. It's almost like Family Guy episodes where they predict the future. Jim Cramer's predicting the future if you do the opposite of what he says. Because Jim Cramer, not long ago, and I saw a chart the other day, he was saying with First Republic Bank, as it's starting to slide, as it's starting to lose momentum and people are getting nervous about it, he said, it's a solid bet. Look it up. There you go.
This was on March 10th. First Republic is new focus, very good bank. And shortly after that, the bank failed. Lost 90% of its value. So First Republic stock crashed 90% since Jim Cramer's called it a very good bank.
I'm laughing, not because I'm actually excited about that, but because that's sick. If any of you watch Jim Cramer for anything other than entertainment and to know exactly what not to do, and you just do the opposite of him, like, I feel bad for people that actually take his advice and actually view him as being someone that's smart. He's being led by the wrong side, folks. Let's just put it that way. So if you listen to him, just do the opposite. But the problem really lies in the big problem. Now, I know the Fed's got an unlimited printing press. They can literally print as much money as they want. But every time they print money, they devalue the dollar. It's why since 1933, when the Fed was created, I think I might have my years wrong, not 1933. Anyway, I got to recheck the history books on that. I usually know it, but need another coffee. So when the Fed was created, since then, remember then $100 was worth $100. It has lost. What is that, Stephen? Is it 95 or now 97% of its value since then? And that's
it's up there.
That's because of money printing. So in a fiat society like we live in, but the world is a fiat society. So let's not make the United States the bad guy here. The whole banking system, the entire, world economy runs on fiat dollars. There is no value behind any of the dollars outside of what the issuer of the dollar says it is. Now, here's the good news. I know a lot of people are worried about the US dollar, going to zero. They worry about it losing value. The US dollar is still the strongest currency in the world, and it is still the currency that results in over 60% of all trade worldwide. Now, I know some of you are like, oh, but there's China, the yuan. The yuan is valued in a very peculiar, weird way. Now, it's made a lot of strides in the last 10 years, but it's still valued by the People's Bank of China. It's not valued like the US dollar on a worldwide basis. So although the yuan has a chance, And China certainly is a rising world power. And probably in the next few years, if the United States doesn't get their shit in order, that China will overtake us as the world, like the leading world economic force.
Yeah, I mean, just on that, China's small steps on offshore use of yuan are starting to add up. So just saying, the yuan currency is slowly but surely being adopted for more international payments, which analysts say could lay foundations for a trade system running parallel to the dominant US dollar. In the past day alone, data showed that more cross-border transactions with China were settled in yuan in March than in dollars for the first time in history, and that Argentina said it aims to regularly pay for Chinese goods in yuan and not dollars. So again, nothing major there, but these small steps, if we don't get our shit together, will start to add up.
Yeah, and it's interesting. I want to hit Yatri on Instagram said, is this a bad time to buy a home if it's a good investment property? Do you see rates falling sometime in the future? That's a question we get a lot. And it comes with two answers. Number one, I wouldn't buy a property right now because I know the price of real estate will continue to go down as rates go up. But I also understand that we are almost at the end of the tightening. The Fed, okay, which has been raising rates and will do so again today, probably 0.25%, is almost at the end. Okay, because with all these bank fails, and who was it over here that said it? It was perfect. Ray Ward on Facebook said, so the government shorted the banks. Kind of, sort of, yes. The government's playing a big piece in this whole regional bank failure piece because they're basically, I don't really know how to put it in the right words with the right kind of, education behind me on that. But yes, the bank is, or the government is pretty much not doing the banks any favors because the government wants to drive the initiative that these regional banks, they're risky, like they're doing bad things. No, they're really not. But they want to get rid of the regionals so they can put their big commercial banks in place like JP Morgan Chase and Wells Fargo and the other Bank of America. Oh, by the way, do you guys remember the Great Recession? This is a good news flash and a good history lesson. You remember the Great Recession? Yeah. Do you remember Bank of America getting, or basically pretty much getting bailed out by the U.S. government? Oh, yeah, they did. Merrill Lynch actually went bankrupt. So any of you that think Merrill Lynch and their best advisors, they're dog shit. They're owned by Bank of America. So like, don't you dare give any credit to the old, it's pathetic, man. It's just absolutely pathetic that Merrill Lynch is still viewed as a high-end advisory firm when they went bankrupt. If they were so good, why did they go bankrupt? If they were so good about investing money and investing your money, then why didn't they get it right in 08? And they won't get it right this time either. Anyway, off my little soapbox there. Thank you, Morgan. 1913. I had that in my head, but for some reason I said 1933. But yes, 1913, the Fed was created. I got to reread The Creature from Jekyll Island and The Secrets of the Federal Reserve, a banned book. That's some good info. So fractional reserve money system has no reserves, no money, and is definitely fractured. Larry Cox from YouTube just said that. So think about that. The fractional reserve money system has no reserves. It's fiat. There is no reserves outside of what they tell you that our dollars are worth. But here's the problem with that. Our dollars, whether they're these paper dollars or whether they're actual digital dollars, these are the only things we can use to exchange for money, for food, for cars, for housing in this country. This is it. You can't walk into 7-Eleven with a yuan, and buy a Slurpee. No, you need US dollars because that's where we live. We live in the United States. So therefore, the means of exchange in this country is this fiat piece of paper, which as they print more of it, loses its value every time they print money. And there ain't a damn thing you can do about it. So to lose sleep, to get upset, to be mad that, the U.S. is, or the government or the Fed or whoever you want to point fingers at is devaluing our dollars, nothing's changed since 1913. Thank you, Morgan. 1913, it's been the exact same thing. Every time they print money, they devalue the dollar. That's the whole point. And I think they realize that they're at a breaking point right now because now you got countries like China, who owns a lot of our debt, Japan, who owns even more of our debt. See, China's played a really strategic game. And if you study history, China's been around a lot longer than the U.S., but they've never been a world power until now.
Yeah.
They've played a really smart game. And you know how they did it? They've got one thing that we don't have, one thing that Japan doesn't have, one thing that Europe doesn't have. Does anyone know what that is? Population. Sorry, I had to say that long. They have people, lots of them. And because they have lots of people, they have a workforce that the United States doesn't have. The United States is pretty much fucked because of our workforce. And to be honest, so even if a new president came in, or the existing president wanted to bring everything back to the U.S. They wanted to bring textile back to the U.S. They wanted to bring car manufacturing back to the U.S. It ain't going to happen. Folks, any of you own a business, you can't even find employees right now. Nobody wants to work. And if they do want to work, they want like $30 an hour. I'm not getting out of bed for less than $30 an hour. And I'm talking about like McDonald's and just normal jobs. Listen, no disrespect to any of them, but like that's an expensive workforce. In China, even though it's now changed a lot and the average pay has more than doubled in the last decade, okay, for people, it's still way cheaper. Same thing with India, same thing with Mexico. So why do you think a lot of our industry is Vietnam? It's not coming from Singapore, is it? Because Singapore is too expensive too. It's coming from Mexico, India, Vietnam, and still China, because they've got the workforce and they can produce goods and services way cheaper than we ever could because of one thing and one thing only: population. So if you think that the U.S. is ever going to bring all their manufacturing back here, they can't. Well, they technically could, but we can't because our workforce. We've gotten to a point in every empire gets there where we literally have outgrown our ability to be the world power from a production standpoint. And the problem, we can from a technology standpoint, but we're losing ground to China on that level too. We just can't because our workforce is too expensive. And that is a big problem. There are things that we could do to change that, but we're not doing it. Oil. We got lots of oil on the ground here. We definitely could use oil as a way to prop it up. It's a natural resource. It's exactly what Russia's doing. Look at what Russia's doing. They've got what? Oil. And what are they doing? Leveraging the oil to build relations with India, to build relations with China, to build relationships with the BRICS. And it's working because they've got it. Well, guess who else has got oil, or should I say had the means for oil? The United States of America. But we won't because we've got this green initiative. Oil's bad. It's bad for the environment. You know what's bad for the environment? Legal slavery, which is what they're doing to create batteries for all these electric cars they're making. You really want to know where the problem is? Look at cobalt mines. That is slavery. I don't care what you say, because it is dirty. It is bad for the environment. And when you make the batteries and the batteries wear out, they got nowhere to put it. So I don't care what you say. This whole EV push is just, I think it's a political ploy. And Elon Musk, the owner of Tesla, one of the biggest electric car manufacturers that there are right now, says the same thing. But let's get off that horse, because I always get a lot of hate when we get into that, but that's okay. Sometimes, folks, the truth hurts. So what do we got? We got some questions coming in over here.
Yeah. We can hit some stuff.
All right. I know I got a bunch of them over here on TikTok. I don't want to just talk the whole time. I want to really talk, in sense of what our audience wants to hear. Oh, I forgot Yatri's question, and I never hit that about housing. We're in a rising interest rate cycle, but yes, we will when we're in a recession right now. Technically, we're in a recession. I don't care what they say. When we get deeper into the recession, when we lose unemployment numbers, we will head back down the other side. Eventually, when the Fed gets to their target or close, they will start dropping interest rates. But you're probably a year, 2 years away from that.
Yeah. And I got some stuff we can get into if you don't see any questions.
Well, Robbie said I'm wrong. I'm talking about cobalt, and it's already been phased out, and I'm wrong. Okay, well, prove that you're right then. Tell me why I'm wrong about cobalt, because I haven't done extensive research. So Robbie, you probably, or Robert Klobber is his name. I probably don't know what enough about it. So please prove me wrong. But the data's out there. The cobalt mines, and all that, like, it's not good for the economy, or not good for the environment. That's for sure. Anyway, Stephen, take over from there, and we'll see if we can't get Robert Klobber to give us his definition of why cobalt's good.
Yeah, just a couple things going on. Can you see the with car repossession screen?
Yeah.
I just making sure it's switched. All right. So this came out a couple days ago. That was interesting. With car repossessions and home foreclosures rising, some Americans are living on a financial cliff. And it just gets into a little bit about the slowdown is just starting to show up. And this is what we were talking about earlier, which is people are feeling the pain right now. According to a new recent survey, 49% of adults have less savings compared to a year ago. 10% of those surveyed said they have no savings at all. The most disastrous outcomes for U.S. households, like auto repossessions and home foreclosures, have begun to climb. As a result of the expiration of government stimulus and current economic headwinds, we have seen delinquencies ticking up in this space over the last several months. After jumping nearly 34% during the pandemic, the personal savings rate is now roughly an eighth of what it was during that time. So you can see this just continuing to sink. We look at U.S. auto loan data. Household debt is up across multiple categories. So you can see mortgage debt increasing, auto loan debt increasing, student loan debt increasing. Now they're back on credit card debt is continuing to increase. So savings are dropping hard and debt is increasing very strongly. Revolving credit, the bulk of which credit card debt, has reached all decade highs as of right now. So none of that is good stuff for the economy, Chris.
Yeah.
And then we look at, we kind of pivot over to look at, just to kind of change subjects here. We were talking about insider trading before. So this is something this is a good chart. So this was 2022, and this is just showing various members of Congress and what they were able to do last year trading. And it's pretty messed up between Democrats and Republicans.
It's on both sides of the.
It's on both sides. So just as an example, the SPY, which is an index on the S&P, traded at negative 18%. So you can see how a lot of these members of Congress were able to do. And when you average it all out, how are they doing that? And that's what a lot of people want to know. So
it's called insider trading, man. There's the leader of the insider trading revolution inside of Congress.
Here's a rare bipartisan bill coming through Congress, which I would love to see happen. But two of the more polarizing figures in the House, Matt Gates and AOC, are getting together and putting together a bill that would ban Congress members from trading on individual stocks. So I'm all for this.
I'm all for that. I can't believe AOC is behind that. Well, all right. Kudos to AOC. That might be the only time I ever put my hands together for that whack.
Me too. Give credit where credit's due.
Yeah, exactly. Good job, AOC.
It's kind of cool to see some, there's wild stuff that goes on in politics. So it's kind of cool to see some of this wild stuff coming to something that actually makes sense. Like, this shouldn't be wild. To me, that should be common sense. And then bouncing over, something we got to, I got a lot of different topics, but something we definitely got to hit on is the debt ceiling. Have you been following the debt ceiling and what's going on with that?
Not closely, because I've been on the road now for the better part of 5 straight weeks.
So we're about a month out from when the debt ceiling is said to expire, where we're going to hit the debt limit. As of June 1st, it could be a couple weeks after that. But within that time, if a deal is not made between Democrats and Republicans in Congress, the U.S. will, for the first time in history, default on its debt. Now, there's a lot of talk about 11th hour deals being made, and but both sides right now are pretty dug in. The Democrats basically said, listen, if you guys want to negotiate, come out with a proposal, kind of called the bluff. The Republicans called it and came out with a proposal. The Democrats said, no, we're not willing to negotiate at all. We either want all or none. And so it's all that posturing that goes on typically in politics. But if the U.S. was to default, it would not be a good day.
No, it would not.
For the United States of America. So we'll keep paying close attention to that over the next month. And hopefully these idiots in Congress get their asses out of bed and make something happen and figure something out for us, because it could really be a mess. So we got that to watch.
So I want to just hit a couple things here, a couple comments. Ray Mellon over here on TikTok said, why don't they tell us that most EVs are charged with coal generation? Yeah, well, I don't know. I mean, because you think you got an electric car, you're helping the environment, but where's the electric come from to charge your car? Well, still, and I know they're trying to change this, but it's still heavily supplied by coal and oil. So when you're thinking EV is so good, and Robert Clobber still hasn't told me why the whole cobalt thing, why I'm wrong on that. But I got some other people telling me that I guess we're pretty right. Let me just come over here and read this. Let's see. And I want to hit the Bank of America thing, because you're right. Bank of America got bailed out, but they did pay the money back. But does that mean that they got rid of the government as their partner? That's the hidden question. So the government gave Bank of America and bailed them out. Yes, Bank of America paid them back. But did the government take and get their fingers in the cookie jar and become a hidden partner within Bank of America like they did with GM? That's the hidden question we really need to answer. Lynn Green, who's somebody that really does have a really strong finger on this and has a strong opinion, said those coal mines are cutting the workers' lives in half. Like I said, it's literally legal slavery.
Here's how you know it's political. I mean, you have this complete idiot, our energy secretary, Jennifer Granholm. She's coming out and doubling down on last year's announcements that the Biden administration to require U.S. military to implement an all-electric vehicle fleet by 2030. So in 7 years, this lady wants the entire United States government military to have an all-electric fleet of vehicles and equipment. So, we're in the middle of Iraq. We're in the middle of one of these shithole nations where there's no power, there's no grids, there's no Tesla charging stations, and you want our tanks and our Humvees and our military equipment to be run off of electric. You complete fucking idiots. Like,
how many of you want to fly in an electric airplane? Any of you? Anyone? Like,
it's unbelievable. That's 7 years away. Like, what are you people talking about? So that's why we know it's all just political. It's just garbage.
Yeah, it's crazy. Now, and again, it's just like I've taken more of a stance where like all politicians are pretty damn crooked. The Dems and the Republics. Like, I hate this divide. Let's just focus on the problems and figure out how to solve it. But the problem is the media does not want to back off of this divide. They want to keep the country divided. And I can tell you where that lands. History will prove it. It lands in a civil war, probably a bloody, awful civil war. And really, when you think about why we would head to that kind of an extreme, just look no further than all the media outlets. Look at, like, I know many of the folks out there that would maybe say Republican is the best way, watched Fox News, but just look what just happened to Tucker. Like, and I love it. Valuetainment. Okay. Patrick Bet David just offered him $100 million and a whole bunch of like equity in Valuetainment, which is a huge media source. And I thought that was pretty interesting. But, is Fox the place to watch if you're Republican? I don't think so. I think it's all broken. I think the entire media is broken. So when we think about where we get information, people were asking, how do you get your info? Where do you get it from? You're going to have to go to private sources. You used to pay for the Wall Street Journal. You used to pay for the paper stop, pay for newsletters from economists, pay depending on what you like to read about. I mean, if it's the sports, well, then get the paper, I suppose, because that's probably pretty accurate. But if you want the truth about economics, you want the truth about money and what's really going on, then get the white papers, go to the sources of where it comes and where you're going to get the truth. And even then, it's still going to have an opinion because we all have an opinion. We live in this country so that we can have our own opinion. But it just seems like today we need to just follow or conform to the mass opinion. And sorry, I'm not buying it. Like, no way. That's where you got to draw the line. You got to create. And that's what I like doing. I like creating things and I don't like conforming to anything. Let's see. What else do we got? The EMP storm will ruin everyone's day. Yeah, that's right, Larry. The EMP storm. Think about that. If everything was electric and there was an EMP, it shuts it all down. We've already seen that. We know what that is. It's nothing new. It's not just in the movie The Matrix. Sometimes I think The Matrix was actually created to show people the reality of what's really going on in a roundabout way. Maybe escalated a bit, but like there's so much in that movie. If you read between the lines, it's like, wow, that's not too far from what's actually happening. Maybe they're not little robots running around that look like squids, but you get the drift. Let's see. Once again, they're trying to ban from owning individual stocks. They've tried that in the past. In California, this is Lynn. So Lynn's in California. She said in California, you can't even charge your Tesla when the heat comes and there is no electricity. Yeah. I remember that last year when they were having all the power outages and everything. You couldn't charge your car. I did a video on Instagram that got more hate than just about any video I've ever done, talking about why I love driving my gas guzzling bi-turbo V8. And I don't poo-poo on Tesla. I actually say it's a marvel. It's an amazing piece of technology, but I do poo-poo on the fact that this whole EV push, it's a political push. It is. There's no other way around it. Okay. It's all political. And that's the problem. You can't go all EV. The grid can't hold it. Right there, Lynn just explained that the grid already isn't holding it. And Josh Sneed said The Matrix is a documentary. Is probably absolutely correct. Josh was just with us out in Utah for that PMC Money Tank event. We had a great time with Josh. It was such a good time. Let's see. They have to show us what they're doing. RE The Matrix. So there's another person on Instagram coming in saying that that The Matrix is actually a documentary. It's a scary, scary reality. Let's see. 15-minute cities come in. They want to digitize our money and have control. They're already digitizing our money. That's already happening. Media does not provide the truth, but it pushes agendas. Ooh, EWELIN. It's a long, weird name, but absolutely. Tucker was calling out the media for what it is, been doing that, and the media and government are the mafia. Well, probably absolutely true.
Oh, they're coming after him too. Like every day,
I
there's a new
know, I
smear.
see
Like I
it.
just pulled
It's
up today just to see
insane.
what's going on. Now they're trying to say he sent a text how white men fight or something. I don't. It's every day they're coming out with some new like gotcha for Tucker, and it's just like the most silly, ridiculous things. But look how every single news publication out there says the exact same thing. It's just wild to watch it day in and day out. Like how anybody reads this kind of news and just thinks of it as fact is beyond me. I'll never understand it.
Wow, this is interesting. Iron Mountain said, gee, we in the rolling blackouts in Nebraska. Nebraska, think about that. It's a pretty cold place. So in the winter, their power grid couldn't handle the cold, so they had rolling blackouts. How do you want an electric vehicle in Nebraska in the winter when they cut your power grid doesn't work? Gets kind of cold. Same thing here with Buffalo. So to all those with electric cars, maybe get yourself a Prius. At least it's got a little engine that will power it. Whatever happened to that? Like, I don't mean to keep going down here, but there's just no news that's really even worthy of talking about. Let's talk about the Prius. How many of you think the Prius is just I think that's one of the best cars ever built. Do you know why? Not because Toyota made it. I'm not a Toyota fan. I'll never own one, but the Prius, an electric hybrid. Every taxi was a Prius. Why? Because it worked. Okay. It used electric to produce a 40 or 50 mile per gallon vehicle. And which, just by the record, I want everybody to really listen to what I have to say. 40 to 50 miles per gallon out of a hybrid, which is a gas hybrid, right? They have a gas powered engine and they've got the electric battery. We all know what a Prius is. The Prius is, amongst all vehicles on the road, the cheapest vehicle to operate, cheaper than any electric car. Charging your electric car costs more than owning a Prius and putting fuel in it at 40 miles per gallon. So if that was really such a great model, which indeed it was, I think Toyota nailed it with that. They had great range on the electric side of it. It's self-generated power through its braking system, which Porsche and some other hybrids do, but it doesn't seem like anybody got it as good as Toyota did with the Prius. But now the Prius wasn't good enough for Uncle Sam and Mr. Government, so now we got to go all electric. And now we're seeing cars catching on fire. We're seeing rolling blackouts. We're seeing all sorts of issues, more cobalt. Like, what was wrong with the Prius model? That was a great model. Push that forward. Go deeper into the hybrids. Put the technology into a hybrid model so you got a gas-powered engine. So when you're in negative 40 degrees in Nebraska and your battery dies in an hour, you got a gas-powered engine. What's wrong with that? Maybe I'm the one that's crazy. Let's see. Somebody here said why Prius is history. It's cheap, doesn't provide. Doesn't provide profit for the elites. Oh, sure. All right. Well, riddle me that. That's probably the truth. Yep. Moving on. Great car, but didn't provide money to the rich. Well, here's an interesting thing. Study electric vehicles. GM. Oh, just so you all know, who owns GM? The U.S. government. Anyway, moving past that. GM is going all EV. Has anyone studied the books of GM? Where does GM make all of its money? Steven, where does GM make all of its money?
I don't know, actually.
Gas guzzling, full-size pickup trucks. That's right. That's where GM makes all of its money. Do you realize that GM's EV line is a lost leader? It loses money. They make all their money selling gas-powered pickup trucks. Same thing with Ford. Ford just reported really strong earnings. Why? V8s, bi-turbo V6s, not electric. The electric is actually losing money, but they got to push the agenda. And what I guarantee you behind closed doors, the same thing that's happening to Elon is when he doesn't conform, no more bank money. They literally, it's kind of like an EV. You can just shut the power off to, somebody's charging. Well, they can shut the bank off to GM, to Ford, and to Elon. And they tried. If you remember when Elon had that lawsuit and all that stuff going on, they pretty much forced him to a decision because otherwise they were going to freeze his bank accounts.
Here's a why. Somebody just sent me this. Check this out, Chris. Let me pull this up. So this is a image of bank failures in the United States history. So if you remember, the largest failure in history back in 2008 was Washington Mutual. And then you see, when the collapse happened, obviously a lot of these smaller banks all collapsed. We've had some kind of smaller ones over the last few years, but not much recently. And then look at just in the past couple months here, First Republic Bank, Silicon Valley Bank, and Signature Bank. So these 3 banks, these were 3 of the 4 largest bank failures in the United States history have just happened this year.
And there's going to be a lot more. I mean, talk any of the white papers that we read, there's going to be a lot more bank failures. We're not done. Whoops. Sorry.
That's a mind-blowing chart right there, though, if you want to try and look at what's coming next. I don't know, because look what happened after Washington Mutual, all these other small failures. We've now had 3 of these things happen. What's going to happen next?
I don't know.
That's scary.
Yeah. So here's somebody said, I don't know. It made Toyota stockholders a lot of money. You're right. The Prius was actually a really profitable car. If you look at their balance sheet, you know, I just think a lot of people make investment decisions based on emotion and not on logic. Because right there.
I got a question. If anybody has ever bought a Prius, I've never purchased one, so I don't know what the contract looks like. But is there a contract that you sign when you buy a Prius that says you must drive 10 miles an hour under the speed limit in the fast lane at all times? I'm just curious, because every Prius I see is driving 10 miles an hour under the speed limit in the fast zone, in the fast lane. I don't know what it is about you Prius drivers. It must be a contract. So I'm just asking questions here.
Anyone that owns a Prius, when you signed up for the Prius, did it tell you you had to drive 10 miles under the speed limit? Just asking for a friend. Where's the recession you're always project? You're in it, asshole. Don't be a dick. You're in a recession right now. Oh, where's the recession you always predict? Listen, I can't time the markets, and the Fed can print money, which kind of pushes things on. People, I can't stand people like that. I really can't stand assholes like that. Oh, where's the recession that you keep predicting? We're in it, you dumbass. Look at the economic data. And the only reason he's saying that is because he's still freaking employed. The second he's not employed, he's going to be like, oh, well, we're in a recession because of Chris saying we're going to be in a recession. That's what that asshole is going to say.
Yeah, I mean,
unreal.
This is the only thing that's really keeping everything from crashing right now.
It is. It's just the unemployment. I've been saying this for a while. It's the third leg of a 3-legged stool, and the other 2 legs have already broken off. It's the only thing holding us up is the employment numbers.
I mean, this is fascinating. Private payrolls rose by 296,000 in April.
Stop the name
above
calling.
Last month's 142 and the estimate of 133. Where does that come from? Like,
I don't know. Somebody just said to stop the name calling. That somebody else should just go to another channel. Why are you on this? There's people here because they want to see idiots like that get name called. Are you too soft to get called a name? I love it when people say I'm an asshole. I love it when people say you're a piece of shit. I'm like, you know what? Yeah, I am. Because I tell you the truth and you can't handle the truth. So go somewhere else. Rude. You're rude because you think I'm rude. Go somewhere else. Tweety bird. Bye-bye, Tweety. Bye-bye. I'm going to sick my cat on your little Tweety ass. Cash, wake up. Go get the bird.
Hey, I got some more good news. It looks like we're going to be able to get breadsticks at Ruth Chris now. So that's
fantastic. Cool. Great. That's awesome news. We always close with the most important news. Olive Garden owner is going to provide breadsticks. So, yeah, you're right. The truth hurts. So, Tweety, but Tweety's still here. See, that's the thing.
All right. I do got one last announcement. Congratulations to the Florida Panthers moving on from the first round of the NHL hockey playoffs and won game 1 last night, the first game 1 playoff win they've had since like 1994 when they first came into the league. So congratulations to the Panthers. I hope to get to a game down there for this round 2 playoff series against the Toronto Maple Leafs, and whoever your hockey team is, good luck to them during the playoffs. I talk about basketball, but I don't really follow basketball. So if anybody is basketball fans, I hope your team's winning as well.
We'll finish on this. Tweety said, I'm here for some good info, not the name calling. Kudos. I totally agree with that. I'm glad you're here for the right reasons, not the wrong reasons. The name calling, well, I'm just going to peg that one. I'm from New York. We tell it how it is. If you don't like it, it sort of just comes along with the territory. So, Tweety, love you. Thanks for coming for the right reasons. Thanks for joining us today. And for all of you, thanks for joining us for another episode of What the F Happened. My cat is just going to keep sleeping, so he's not going to be going any bird hunting today. So we thank every one of you for joining us. We thank everybody on TikTok, on Instagram, on YouTube, and also on Facebook. Thanks for joining us. Make sure you subscribe to my YouTube channel where I'm putting all the best information. And when you want what's the latest and greatest, you're going to get it on YouTube. So subscribe to the YouTube channel at The Chris Naugle. Until next time, or until this afternoon at 1 p.m. Eastern, we'll see you.